नमस्कार। मैं आपका दोस्त सीए मनमोहन, रजिस्टर्ड वैल्यू इंस्टीट्यूट एंड फाइनेंशियल एसेट्स, एक्स बैंकर, प्रमुख. We were discussing in the first video about the fact, the related part of the factoring we shall discuss in the video, that why we need factoring over and above the else. When LC is available, why we go through the factoring. So more and more customers nowadays resist buying on LC because LC is little bit tricky or little bit difficult to get in. So they don't like idea of their having to finance your sales at their cost, while it is at the cost of the buyer. If you are to expand your sales to a larger market, you must be able to offer buyer-friendly terms. And that means open account or at least create. Factoring is the right solution in contemporary business because buyer get the supplies and seller get the money immediately after supplying the goods on the credit terms. Though little bit costly but easy to operate. So factoring is different from the banking because bank provide financing based on seller strength, available collateral, needs collateral, while factor assess buyer strength, ability to pay, and provide funding against assignment of risk. So they see that whether buyer is competent, buyer is strong, buyer is ethical, buyer is charactersome. So these points are seen, while the financing, CC limit, or other things are on the seller side. Loans from bank appear on your balance sheet, while this is not appear into the balance sheet because it is already appeared as a sales or receivables against which you are discounting. Funding from factory is off balance sheet item, not the on balance sheet item. So in banking, enhancement limit is usually done on annual review, while factoring is a quick solution, quick response in the as the interim as well, because it is financed on transaction to transaction basis, bill to bill basis. Bank calculate drawing power on periodical statement of current assets. Factor provides funding based on individual invoices. Individual invoices. So this is the benefit in this factoring. Pricing of banks appear on prima facie final, no doubt, but factoring is a total package of receivables management services, including finance against credits. Though seller has to pay a little bit more interest or more discounting factor, but it is still beneficial because he is receiving so many other invisible services which gives the seller a peace of mind and a thinking to grow his business in a better way. So bank discourage double financing by factors. However, funding by factors is routed through the bank account with full disclosure to the bank, who has given the bank fund to the seller. The factor, the lender, will inform the bank that we are funding over and above the limit you have sanctioned against the bill receivable. So in stock statement, when provided to the bank, so they have to deduct this amount from the account receivable when they are providing the stock statement to the original lenders, that is the bank. So buyer misunderstood that financial position of the seller is weak. अरे नहीं भाई, उसको उससे क्या लेना देना. He needs his goods. He needs goods from the seller. So seller has to make his own arrangement of financing because he has to keep his production on the wheels. So factoring offers flexible modes of liquidity against receivables. Once the line of credit is established by the factor, the availability of cash is directly linked to sales. A growing organization can focus on its core activities of production and marketing by outsourcing non-core activities like collection and sales ledger management to the lender. As the sale increases, availability of finance increases, availability of customer increases, availability of trust increasing, and availability of profit still increasing. This helps seller to improve production, sales turnover, profitability, resulting in uninterrupted supply to the borrower. So, if he had not having the finance, he could not fulfill his pending orders, which he has received into the course of his business. Factoring is preferred option for financing trade receivables in developed as well as emerging markets globally. It is gradually gaining more and more acceptance in India too, especially after the enactment of Factoring Regulation Act 2011, with buyers seeing value in factoring transactions. So, Government of India is also facilitating the factor service and passed the Factoring Regulation Act 2011 to facilitate the customers. So, when seller got discounted or got factored his bill, whether he lose control on his sales? No, bhai, no. Lender will not keep the sellers regularly informed of the position of his individual buyer debtors account, but will also consult him on the follow-up of the collection of the buyers. So mainly the control is of the seller on the buyer, the banker, the factor is only a financing partner against the bill which he has raised on the buyer. Whether accepted overseas? Yes, overseas factoring is well accepted mode of carrying out cross-border transactions. Most established buyers are more comfortable with factoring transactions, and the lender being an associate member of Factor Chain International FCIE can route the export factoring transaction through its counterparts abroad who are promoted by well-known international banking groups. So it is very, very easy for the seller to discount the overseas bills and get immediate payment because the international banking groups provide the better information about the buyer. Customer thinking use of export factoring finance. If they would not prefer to buy an open account terms instead of letter of credit, whether they would like to be able to pay locally or have to make international transfer, you will find that your customer will welcome the idea of availing export factoring finance because अदर पेमेंट करना थोड़ा मुश्किल है, थ्रू बैंक करना आसान है. Factoring would help you save on cost, time, provide very convenient and flexible way of continuing export trade. So it is a win-win situation for the exporter to factor his bill and get the payment smoothly. So By doing this, whether buyer is unpleasant, the lender understands and appreciates the seller's concern over this matter. The lender takes up the task of regular follow-up of dues collection with the debtors as per as mutually agreed terms upon with the seller handles the follow process in the tactual manner or a tactful manner. In fact, factoring helps the seller to avoid the embarrassment of having to indirectly seek payment from the buyer. So buyer कहने से ज्यादा वेटेज कम होता है, बल्कि बैंक जब कहता है तो उसका वेटेज ज्यादा हो जाता है, because already he has assigned the papers in favor of the bank. Periodic submission of invoice due statement by the lender to the buyers helps them to plan their cash flow and make them timely payment. So bank remains in a contact of the buyer time and again and provide all the information in respect of the payment which he needs. So whether you have to inform the buyer, yes, without informing the buyer, how the buyer can pay the amount to the bank. In fact, if payment are routed through us even before a formal section, you will have to provide coordinates or responsible person in your buyer's company with whom we can follow up for collection. Please share with your buyer contents again assignment letter, notice of assignment of receivables, which you shall execute in favor of the sanction of payments. Your buyer shall be required to accept the same to create a valid assignment. The assignment or the agreement is between the three: buyer, seller, and the bank. This is a three-part tight agreement in which all the persons have to agree that which the amount the buyer and the amount has to pay to the seller. Now he has to pay to the bank. In fact, we should prefer that you arrange a meeting of a representative with your buyer so that we may explain the nuances of the factoring facility you propose to avail from the lender. The lender shall send the seller a monthly statement of accounts which shows movement of funds. The statement will provide date-by details of all payments received from the buyer, disbursements by the lender, factoring charges, and discount dates, etc. So there is two-factor increase time from buyer to seller. Generally, customers take longer to process the payment, and though our correspondence credit control system operating in your customer's country, this time should be significantly reduced because he has not to move between country to country. So then another question is that whether seller has to pledge any other assets other than the bill. Normally, there is no requirement to pledge any other asset. The requirement is on case-to-case basis, and this would also depend on buyer's creditworthiness. However, in most of the time, only bill which is raised on the buyer is sufficient and your execution of certain documents. Now, seller is available to pre-shipment credit or packing credit finance. Whether he can avail that? Yes, the seller can avail pre-shipment finance from banks and post-shipment finance from export factoring facility from the lender. The proceeds of the export factoring facility will be remitted to the bank from whom pre-shipment finance is availed by the seller, which will be used for liquidation of pre-shipment finance. The lender provides post-shipment credit under export factoring in USD, GBP, Euro, or NIR to your convenience. This is the US currency, this is UK currency, this is the Europe currency, and this is the Indian currency. So we have gone through all the aspects of the factoring. So now, whether it is suitable for every company. So answer is that factoring is suitable for most trade-related transactions, which have the following characteristics. Situation of open sale account means you are given on credit, involving continuing relationships and assignment of whole turnover with your buyer to the debtor. So if you are having the characteristics of these, the factor is suitable for your company. So we have seen that in the first slide, factor is not attractive. However, factoring involves the following cost. Number one, discount rate, charge on funds in use outstanding, computed on daily balance method as the bank charge. So you are not to pay on the full cost which you are not paid. Factoring charges charge on the turnover, facility setup fees, and facility continuous fees are charged every year on F&I debit. The charges are linked to the external credit rating of the client debtor, that is seller or the buyer, transaction structure, credit period, etc. And business development manager shall be happy to answer all your queries. To arrange a meeting, send a request to us. So lender business promoter or lender business officer is always ready to provide or solve your queries. However, in the earlier slides, we have seen that factor is little bit costly. So how the discount rate is applied? So discount rate is levied by the lender only on the amount used by the seller. The discount is played on the डे टू डे बेसिस जितना यूज किया उतना ही चार्ज लगेगा for actual period when funds are advanced and the collection received in the account against the outstanding. So this is very convenient for the seller that he can use the amount which he requires. So question arises that how the factor amount is repaid. So it's very easy that factor has advanced the bill which is self-liquidated in nature from the payment by the debtor on due date to the lender and the lender expecting correspondence. उसको लेंडर बैंक को या उसके कॉरस्पॉन्डेंट को जैसे ही पैसा देता है तो बिल इज सेल्फ लिक्विडेटेड. The lender will pay the seller the balance if any after adjusting the advance and outstanding charges. So because he has financed only 85 to 90%, so after deducting his amount, the lender pays back the further amount to the seller. So what is FCI? So we shall discuss the related rest of the part in the third video because it is going little bit lengthy. धन्यवाद.